Most people think buying shares is only for the rich. What if I told you that with just your smartphone and a few thousand naira, you can literally own a piece of shares in GT Bank, MTN, Wema Bank, or even Transcorp? Today, I'm breaking down the exact beginner-friendly guide to buying company shares in Nigeria, the step-by-step, without jargons, without confusion, and without you falling into the common traps that new investors make that will make them lose their money very fast. By the time we reach the end of this video, you will know how shares work, how to pick good companies, where to buy them safely, and the mistakes, the very mistakes you must avoid. So let us open this box from the very top. What exactly are shares? Imagine your favorite company is a giant pizza. Shares are slices of that pizza. When you buy a slice, you are not just holding a dough and cheese. You actually own part of the company. If the company grows, your slice becomes more valuable. If the company pays dividends, you get a little piece of the profit. In Nigeria, companies sell shares through the Nigerian exchange group, which was formerly known as the Nigerian Stock Exchange. This is where all the big names sit. Dangote Cement, Lavage, BUA Food, GTCO, Zenith Bank, you just name it. This is all where they all sit. Why should you even buy shares? Let's talk about that one. Let us be honest. Saving money in Nigeria feels like trying to fill a leaking bucket. High inflation keeps chewing money like chin chin, puff puff. Shares, on the other hand, give you a chance to grow your money faster than inflation, ownership in real business, dividend payout, the ability to build long-term wealth, something you can pass to your children. This is why some people who quietly bought shares 10 to 20 years ago now have millions sitting in their CSCS accounts. Before you even think of buying shares, you need to know this. A lot of beginners rush into buying shares because they heard invest in stocks, so don't dull. Oh. But here's the truth, not all shares are good shares. Before you invest in a company, ask yourself, is the company making profits? Public companies release financial reports every quarter. Check if the revenue of that company is growing or dying. Will this company still exist in 10 years? That's another question you need to ask yourself. A bank like Zenith, most likely yes. A bank like GT Bank, most likely yes. Dangote Cement, definitely. A random company that nobody has heard of, maybe not. Is the company paying dividends? That's another question you need to ask yourself. Banks and cement companies like Lavage, Dangote Cement, they usually pay steady dividends. That's why many Nigerians rush their shares. Does this company have real demand? That is another survival question you need to ask yourself. Think about MTN. Everyone buys data, everyone makes calls. So the company has constant demand, and demands what? Demands drives growth. When you think this simply, share buying becomes clearer, not scarier. Now, let us talk about what you need for you to get started in buying shares of your favorite company. Here is the sweet part. You only need three things. A CSCS account. This is like the bank account where your shares are stored. CSCS stands for the Central Security Clearing System. Secondly, a stockbroker or a digital investment app. This is the platform you use to buy these company shares. The third thing you will need is just small money, chicken change. Seriously, you can start with 5,000 naira, 10,000 naira, even 1,000 naira, depending on the stockbroker or the digital investment app you want to make use of. You don't need millions to get started. The idea is to start small and grow slowly. Where can you buy shares in Nigeria? This is very, very important. You don't just buy shares anywhere in your world. You have to, so you need to ask yourself, in Nigeria, where can you buy shares? Through a licensed stockbroker. Old school method, you can go via Meristem, ARM, CSS Stockbroker, United Capital, Stanbic IBTC, Cardinal Stones. Those are the old school method. Secondly, through modern investment apps, we have Invest Babu, True Finance, we have Chaka, we have Coinwise, we have RiseVest, we have Meritrade, which is owned by Meristem. These apps let you open account fast, see prices in real time, and buy shares with as little as you want compared to all those old school traditional stockbroker. How to actually buy shares in Nigeria? Let me give you the step by step of how to buy shares in Nigeria. Let's use a simple example. Let's say you want to buy 100 units of MTN shares. The first thing to do is to choose your investment app or your stockbroker. If you want to make it a traditional stockbroker, you can just download Invest Babu, True Finance, or if you want to make use of traditional stockbroker, you can make use of Cardinal Stone, Meristem, AfriInvest. Those are traditional stockbrokers you can make use of, which are licensed by the CSCS. Now, open your CSCS account. This is set up automatically if you are using a digital investment app like Invest Babu, True Finance, RiseVest. But old school brokers may require to fill some forms either online or physically. The next thing you need to do is to fund your account. Once your account is has been successfully approved, you can now go ahead to fund it. Take for example, True Finance allows you to start with a minimum of 1,000 naira. So all what you need to do is to fund the account with 1,000 naira. While Babu allows you to start buying shares with a minimum of 5,000 naira. So you have to know the minimum amount you will need to start purchasing shares in each of these platforms before you put your head into it. Now, the next thing to do is to search for the company you are interested in. Take for example, don't forget we are making use of MTN. Want to buy 100 shares of MTN. The next thing to do is to just type MTN Nigeria or their ticker symbol. Then the next thing to do is to purchase the 100 shares. Click on buy, or you can make use of there are two options, the market buy options or the limit buy options. Take for example, if MTN is being traded for 470 naira at the market price, you can just simply go for the market price, which is 470 naira. But as time goes on, the market price increases to 420. Don't forget that they already make use of market price. Then you have no choice than your order to be executed at that 420 as market price. But if you make use of the limit order options, you can simply, okay, I want to buy MTN shares at this so price, not at the market price. Your price can be higher than the market price, can be lower than the market price. That's where the limit buy option is for. So once you click on buy, your stockbroker or your investment app you're making will process it, and the shares will show up in your CSCS account. The next thing you want to do is to wait for confirmation. This usually be at an instant if you are using the market buy option, but you are making of the limit buy option. You have to wait for some minutes or for a few hours. That is it. That you are now a shareholder if your order is confirmed, if your order is approved, and that a shareholder of MTN. How do you make money from buying shares? These are a very important question that you be asking yourself. Everybody wants to make money, so you're asking yourself, how do you make money? Now let's talk about how you can make money from purchasing shares. Number one is capital gains. This is where the share prices increase. Take for example, if you purchase MTN at 400 naira per share and it increases to 600 naira per share, don't forget that you purchase at 400 naira per share, now it is now 600 naira per share. That means you've already made a profit of 200 naira per share. The second ways to make money is via dividends. Some companies pay dividends. Take for example, Dangote Cement, MTN started paying dividends this year. We have Zenith Bank, GT Bank, Wema. Some companies pay dividends, so you need to research if the company you are interested in are purchasing dividends. If you are kind of someone that you are purchasing the company because of their dividend payments. Bonuses. Companies sometimes give free shares to their investors. Long-term value. Shares build wealth over time. Think about a coconut tree. Slow at first, but once it grows, it feeds your life forever. What kind of shares should beginners buy? Beginners, you don't need to just put your head into the Nigerian stock market and just start purchasing companies. You need to, there are some companies that you need to run away from. There are companies that you need to purchase, but don't forget that this is not a financial advice. Do your diligence. So what kind of shares should beginners buy? Beginners should be interested in purchasing blue chip stocks. These are stable, reliable companies good for long-term investors. For example, we have Zenith Bank, Access Bank, Guaranty Trust Bank, MTN, Lafarge, Dangote Cement, BUA Food, Seplat. But note that some blue chip stocks are illiquid stocks, while some are liquid stocks. Don't worry, in my next video, I'm going to explain the differences between illiquid stocks and liquid stocks for you. So let us continue. We can, as a beginner, you can also purchase dividend stocks. If you want steady payments, banks and consumer goods like MTN, they are very good. They are very great at paying dividends. So you can start purchasing dividend stocks. As a beginner, you should also purchase growth stocks. These are fast-growing companies, sometimes smaller or newer, but be very, very careful. Growth stocks can move fast and can also fall very hard. And when it falls very hard. Here is the problem nobody tells beginners. You can make money buying shares, you can also lose money very fast when purchasing shares. And beginners usually lose money because they enter the market blindly. The common traps include they buy shares, they buy any stock that is trending on social media. Don't do that. They panic sell when prices drop. They invest all their money all at once. That is what I realized when I started purchasing in the Nigerian stock market. I put money all at once. Don't follow that my mistake. That's a very, very mistake beginners normally do. Don't buy stocks from dying companies. They have no strategy, no entry, no exit strategy. As a beginner, you must have an entry and an exit strategy. Buying shares is simple, but staying profitable is the real deal. So now, how do you avoid losing money? Let's break this down like we are sitting together with a code ones and meet by, even though we're not sitting down with a code ones and meet by. Never buy shares without doing your research. If the company's revenue is falling every year, why are you buying it? Run away, man. You need to run away. Don't panic when prices drop. This can give you the opportunity to either buy more or sell. So you need to do your diligence. If the company is a very good company, if prices drop, it gives you opportunity to purchase more. Stock prices move like Lagos traffic, up today, down tomorrow. Mostly all predictable in the short term, but over the years, good companies dey rise. Invest slowly. This is called dollar cost averaging, DCA, but let's call it small method. Instead of putting 100,000 at once, spread it, 20,000 this month, 10,000 next month, etc. If these prices go up or down, you're always averaging your cost. If prices go up, you can buy more. If prices go down, you can always buy. So you need to know how to do your dollar cost averaging. You need to know have a strategy that, okay, I'll purchase these shares every month, every week, but do not put all your money at once. Don't do that mistake. I did that mistake, so I don't expect you to do that mistake, because I'm telling you, don't put all your money all at once. Diversify. Don't put all your money in one stock. If you have 100,000 naira, want to invest, don't put all 100,000 naira in a particular stock. Diversify, spread, purchase 2-3 stocks. If one crashes, your whole life shouldn't crash with it as well. Track your portfolio. Check your shares once a month, not every day. Watching every moment will give you unnecessary high blood pressure. If you are checking your portfolio account every single day, every market day, you are definitely going to have high blood pressure, because the entrance market always give high blood pressure because of the increase in share price and decrease in share price. If the price share increases, you'll be happy. But when the bear market comes in, that is the real test if you can withstand the pressure. Invest for the long term. Shares are not like betting. You don't buy today to cash out tomorrow. The real money comes from holding solid companies for years. Let's look at an example. If you bought GT Bank shares 10 to 15 years ago, you have earned steady dividends, price growth, bonuses, long-term value. That is how wealth slowly builds. As a beginner, you need to be aware of penny stocks. These are cheap shares that look attractive, but cheap does not mean good. Sometimes a company share price is low because the company is struggling. If you are a beginner, avoid this until you understand the game properly. Don't just purchase a stock because the share price is very low or very affordable. Do your diligence about the company you are purchasing. Don't just jump into purchasing any penny stock you see in the Nigerian stock market. Let me tell you a true story, the kind that wakes you up. There is a man who bought shares of a famous Nigerian bank in the early 2000s. He didn't have plenty money then, but every month he bought small, 1,000 naira, 2,000 naira, 5,000 naira, as little as he could afford. Year after year, he kept buying. The bank kept growing. They paid dividends. They issued bonuses. The price increases. Fast forwarding to now, that small monthly habit turned into several millions. He didn't run around searching for jackpots. He didn't gamble with hype stocks. He picked a strong company and he stayed consistent. This is the real power of buying shares in Nigeria. Not rushing, not guessing, not assuming. Just choosing wisely and staying patient. And that's the biggest thing beginners miss. You don't need a lot of money. You need consistency plus good companies plus time. If you are kind of someone that you want to buy shares today and cash out tomorrow, then the Nigerian stock market is definitely not for you. The Nigerian stock market is about time, you being patient, you being consistent, you purchasing good company, and you giving it time. You need to give it time. In summary, buying shares in Nigeria is not that complicated. You only need a CSCS account, a trusted app, or a stockbroker. If you're making use of digital app, a CS account will automatically be opened for you. So all what you need to do is just download any of the digital investment app like Vesbabu, Cho Finance, Chaka. They will automatically open a CSCS account for you. The next thing you need is basic understanding of the companies you are purchasing, a long-term mindset, and money, because you can't buy shares without money. Focus on companies that are profitable, stable, and have real demand. Start small, buy consistently, don't panic when the price falls, and don't let fear stop you from owning part of the business that's run Nigeria. If you stay consistent in a few years, you look at your portfolio and smile at how far you have come. Hopefully, in my next video, I'm going to differentiate between liquid stocks and illiquid stocks for you. That is it, guys. If you have any questions, please feel free to ask them in the comment section. I'll be there to respond to your questions as soon as possible. Don't forget to subscribe to my YouTube channel, like the video, share it, and see you in my next video. Bye.